you see the property market falling and why? What do you think is going to be the great impetus to the market dropping, having a crash?
That's a great
What are the early telltale signs?
Telltale signs, I think, is first and foremost will be a rush in supply. So let's look at 2017-18, when we got to the peak last time. You saw
220,000 homes rather than the 150.
Yep. So rush of supply. And I think you might actually start seeing that at the end of this year. And what I mean by that is...
We saw a 30% jump in approvals just recently.
Correct. So that's one, right? Because basically housing in my eyes is beautiful. It's a perfect economics 101, supply and demand. Demand is clearly through the roof. It's starting to ease a bit, but it's through the roof. Supply hasn't come back, but it's starting to show signs that it is. And it's starting to really accelerate because, those that actually have the supply, those that live in their own home or have got an investment property, what have you, are noticing and are fully aware that the price is up and they're going to want a good price for it. So they're going to start listing their property. So that's the first one that I think is that when you start to see a big rush listings, which is why springtime for me is always interesting because that's obviously peak selling period in retail world is the spring carnival, as I call it, which is spring housing carnival. So that's my first indicator. Second will be whether or not the RBA starts to break its promise around not raising rates to 2024. If you start to see that language not even alter, just disappear, or they start to just move away from using that, we don't think rates will move for 2024, that to me is also a signal to the banks to start thinking about raising rates. They're already doing it. And what I mean by that is if you look at what they originally were doing, they were giving you fixed rates for 4 years at under 2%. They've now completely scrapped all those because they know that in 4 years, rates are going to be higher. So they're giving it to you for 2 years. It looks fantastic, but they are fully starting to price in rate rises and are starting to try and take advantage of it. That's the next thing is that rates will not stay at 0.1 of 1% forever. It'll be for a significant period of time. So when rates start to move, that's also going to start creating on the demand side, just that question, just enough of a question to say, do I need to take this risk? Possibly not. So all of a sudden you'll have demand that will still be elevated, don't get me wrong, but it will start to slow. It'll drop out that risk investor that we just discussed before, and the investor that comes about with that as well. So those investor loans that we're now seeing, that property investor that's returning, they too will basically go, well, I can wait now. I've got my property investment, so I can probably move away. So they're the two things that I'm waiting to see: a rush on in supply and a moving away from discussions about 2024 rate rises.
Yep. They
are my triggers, and I think that's when you'll start to see, and it won't be noticeable, but you'll start to see an easing off. I remember March last year having a discussion with another property people about this, and they were, things were moving along. They weren't really taking we probably all weren't taking fully seriously the extent of the pandemic. But I remember saying at the time, you've just seen the peak of the market. We're about to see it fall away over the next 12 months, and it obviously had. It was not hard to make that call, but that's my watch. What I will say to you, don't know if it's going to happen in the next 8 to 12 months though. There's just so much momentum in terms of the stimulus package we've discussed over the last 20, 30 minutes. It'll still help it, but it's coming. Like it feels like 2013 through 18, just on an accelerated basis. I don't know about you, but it's exactly what I feel like. I feel like we're at 2016 going into 2017 where we are in the cycle. It's happened so fast, so rapidly, since June last year, when everything bar Victoria reopened, you could just see it happening at a rapid rate of knots. All those people that were put in basically into sleep mode came back. That demand that was there in February last year never left. It just re-woke up. But it's starting to just show signs that it will lose steam probably this time next year.
It's interesting because when things run well for a while, people start looking over their shoulder. Like, it can't be like this for too long. I remember in 2013, it started running. 14, it started going. Really running. And then because it was running so well, people started saying, well, it can't run like this forever. And they're getting scared of a price drop. There was a minute of people getting a bit of fear and anxiety in the market because it was running so well. and then it hammered for another 2 years.
Property,
it just kept on going.
I agree with it. Properties, in my view, is also a very hard market to describe, because realistically, each individual residential property is its own market. So if you look at it from the point of view, I don't think the Melbourne market and the Sydney market are the same. I definitely don't think that the Sydney and Adelaide market are the same. There's no way that the Perth market is like anything else in the rest of the country. And then you then think about it from the point of view that if you're in Sydney, they call it the 15-kilometre belt. If you're in Melbourne, it's probably the 8-kilometre belt. In terms of, and what I mean by that is that being located to the city. Property bears love it. They love to talk about all this kind of stuff that we've just discussed. The property market is the property market. If people want to buy your home, they're going to buy it. They're just going to buy it. And that's the other part of this, is that it's not as logical as saying supply and demand. It's not because there is emotion, and it's more than emotion. It's family emotion. Like, if you can see yourself in that home with your family for 20, 30 years, price means nothing in that instance. And you see that at an auction. You can just see people getting carried away with the emotion rather than actually the really hard-headed things that you and I are talking about. So there's no real true property market in my view. But what there is that once you start collating them as a unit and you start overlaying things, you can see, the greater Melbourne market has, an X amount to expand before it starts to slow down, or the greater Sydney market will continue to run, but maybe the increases in the average price in Sydney will slow down because the outer suburbs start to go backwards, or you do start to see some property squeezes, and people are asking pricing that actually does finally cap out, that isn't getting that demand, and they have to drop their price down to start catching. So that's where it happens. But that's why property is always, I love this discussion, because it's one thing that I think gets forgotten, is that never underestimate the love of behavioral finance in my world. And behavior is so hard to define, and psychology plays into so many things that we do, particularly when it comes to property. Bricks and mortar makes people do some funny things.